Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, president of Universal Accounting Center. And for more than 20 years, I've been working with accounting professionals to actually help individuals start, build, and operate successful bookkeeping, accounting, and tax businesses. Here on the podcast, we actually bring on the show experts, individuals that actually have had success running their own firms, as well as insights from the experts on how we can be doing better in our businesses. And each and every week, we're excited to have on a new guest. And today's going to be a wonderful show with Tim Moy. Tim is actually someone that for more than 20 years has worked hard to become an outstanding professional. By working in several CPA firms, Tim grew his knowledge and understanding of finance and accounting. Additionally, Tim has held the position of controller for construction firms, large retailers, and hospitality businesses. Since Tim joined MBE CPAs in 2000, he has grown to be actually a professional over 200 individuals. Now, Tim is an outside-of-the-box accountant in his thinking. He actually has a finance and an accounting expertise that help him go from a professional in small to mid-sized businesses, helping with strategic advice. In doing so, Tim has actually been instrumental in leading MBE's successful growth pattern. Additionally, he has assisted with startup, grow virtual office, real estate management solutions, payroll solutions, MBE wealth management, savvy business brokers, brand house marketing, workforce solutions, secure storage, and CPA 360. So, Tim, welcome to the show.
Well, thank you, Roger. It's a real pleasure to be here. I'm excited to share our story and maybe some tips for the profession for other folks to benefit.
Yeah, this is going to be a very good discussion because you've got quite a bit of a history here. So let's start with basically your background. Give us an idea of what brought you to the accounting profession. What got you to choose this as something to do for a living?
You know, I knew probably since ninth grade I wanted to be a CPA when I grew up, and I've just been blessed to have a lot of really great people along the way. I think the thing that's maybe connecting for this audience is when I started as a partner in public accounting, we had 3 employees. So we were a very small firm. And that firm, I've been fortunate to be part of that firm's growth as we've gone from 3 employees to today over 225 without the affiliates and over 375 with the affiliates. So the world has changed, but what that's given me is a perspective on how I might operate if I had 1 or 2 employees or if I had 100 employees. And of course, a lot of professionals start in a big firm and they don't really understand what it's like to be in a small firm, or they start in a smaller firm and they don't understand what it's like to be in a bigger firm. I would say my career has transcended a pretty wide spectrum from, say, 3 to 300 people in one organization.
That is fascinating. And you're right. They are 2 totally different experiences, the small firm versus the large firm. And I'm hoping to get into those today. So give us a little bit of background. Is that, you're a young child, you're seeing at that young age that you wanted to become a CPA. What was that trajectory like? Where did you go to school? And, once you finished getting your degree and becoming a CPA, what did you do next?
So it's interesting. I'm part of my story is really struggle. And I think everybody's got struggles. It's just different. But when I was in one of the larger state schools in Wisconsin for accounting, UW-Whitewater, and that freshman year, I found out I was having my oldest of 3 boys. So I took a turn and went to tech school, and then went to Upper Iowa to finish my accounting degree and get my 4-year. And of course, while I'm doing this, I had to work factory jobs and work accounting jobs to get through school and raise the family. So it's a story of struggle and work, but I'm proud of the story. I don't run from the story. And again, all of those lessons that I learned through that struggle were really valuable as we try to grow the business and serve the customers and the employees today.
What were some of the lessons or struggles that you're referring to?
One of my favorite sayings, and I just picked it up here a couple weeks ago, is "work works." And it isn't just getting up every day and working hard. It's also being humble, treating other people with respect. Just some of these timeless core values that and it's nobody's fault. But as we become more of a digital society, we tend to focus a little bit more on the transaction over the relationship. And I really want to live my life where I'm valuing the relationship over the transaction, because I think that's purposeful, and we're living our lives for each other which really the accounting community is the epitome of that. Because one thing I've noticed about the accounting community is there is any of my brothers and sisters in this accounting community that won't reach out to help. I mean, I've had very few experiences where another professional would reach out to help. If we don't have a good experience with somebody, we just kind of move away from them. So we just are true professionals all the time, and that's really what's made it an honor to serve this industry.
I love what you're talking about there. I'm glad that you brought up that this is a relationship-based business. So many people are drawn to it, perhaps because of the numbers, the certainty of those and such.
Yeah.
And you might presume that you could sit in the back room and just crunch the numbers, but at the end of the day, it is a people's business, and relationships need to be built. And I'm glad that you're bringing up that there's a community involved. One of the things that's been a blessing to me over the last 20 years is the accounting community that I've participated in and getting to know the individuals. And you're right, there's more often than not a helpful mindset. If you run into a challenge as it relates to just how to do a certain thing, it's amazing to me how you can reach out into certain communities and people are just willing to share insights and information on how to do something. And they're free giving in that. And I love that. So you spoke of struggles. What were some of the struggles that you recall when you were just starting out? You mentioned obviously having your son while you were in school, working hard, trying to actually become that CPA. What were maybe some of those struggles that you're reflecting back on that made you who you are?
Yeah, so there was a divorce in there when I was young with three young boys. So I had to figure out how to be a single dad and be an entrepreneur at the same time on a startup business. That wasn't just one single struggle. Of course, it's a series of struggles. Um, and then just really as you're growing a business from 3 to 300, one of the biggest struggles is you have to reinvent yourself. Every 3 to 6 months. What used to be important or a priority now becomes somebody else's job or a task that you should delegate to somebody else. Or I use the term leverage. And then of course now as you grow, you've got a whole other host of problems. So it's really just understanding how you personally have to grow. And as an entrepreneur, we don't have the benefit of the employee evaluation where somebody's giving us honest feedback. We often see those employee evaluations as negative, but I've really seen them as honest for the employee. And even if you have partners or you do customer satisfaction surveys, it is a challenge for an entrepreneur to get really good, honest, humble feedback that they can then work to build themselves as a professional. And that's a challenge for every entrepreneur. Um, so I take pride in my ability to reflect and just continuously change as the organization and the people around me change.
You brought up three things there that I'd like to talk to and address. So I'm going to try and just mention what they are, and then I have a few comments. The first is the divorce and being an entrepreneur. I'm glad you brought that up. I think a lot of my listeners can relate to that. There's that personal struggle that we all face as we're dealing with issues that may regard health or relationships, children, and those things are outside of the business, but they impact our ability to grow our companies. And so as entrepreneurs, we are people and we do have things happening. And in your case, you obviously shared that divorce and the three children. The second thing I want to address, and I'm throwing this out there just so that we don't forget it, is you talked about every 3 to 6 months reinventing your role as the entrepreneur while growing the business. And I can relate to that because I was speaking with an individual, the president of a company that was $1 billion business, and he said the exact same thing, that his job was every 3 to 6 months. He even alluded to as much as every year. His job was to, in essence, hire his replacement and take on a new role within the organization. And I thought it was fascinating because he talked about how with his growth, he would identify what the company needed next, but it wasn't for him to do from then on. It was for him to figure out what the company needed. He needed to document what the position involved, and then he needed to hire someone to do it full time. And so that's something I'd like to tap into because you've clearly grown your business tremendously to the 300 and some odd individuals, and there's a lot to be said about that. But the third thing that I also wanted to kind of bring up is with regards to being in the hot seat. You talked about feedback, and as employees, we have a way to kind of evaluate them, give them feedback, help them see where their next opportunity lies, and we don't get that as entrepreneurs. Well, I did something this last time with my management team when we were together for our annual retreat. And I basically put a hot seat down and I set myself in it and I said, look, I'd like honest feedback as to what you would do differently if you were me. And sitting there and having my managers kind of go through and say, I'd do this differently. I think you're neglecting this. I think this is something that we're missing out as an opportunity. I think some attention needs to be put here. It was great feedback. And I think just having a management team where I could ask that question was helpful. So three big things there. So let's go to the first. You brought up obviously the personal struggles outside of business impacting you as you're running your company. How did you cope with the things that needed your attention outside of the business while growing the business, personally, emotionally, with those relationships? What comments do you have for that?
So I think two things. One, I have an amazing family. Really, back then it was an amazing young parent, my parents. So it's amazing when you're trying to do good things, how people around you support you. So I was blessed with some wonderful parents that supported me through that time. While I felt I was sometimes shortchanging my children, I think what I was doing is teaching them how to be a true professional.
Mm-hmm.
And so one of the things that I try to focus on is, efficiency. And so I don't let things build up. I don't let projects build up. I try to calendar everything. When you look at my calendar, it's pretty much packed Monday through Friday, 8 to 5. So I try to just stay disciplined and be honest that and I want to encourage one of our key points is that we try to proactively handle things, and if we don't proactively handle them, we communicate. Or excuse me, I'll try that. One of our ideas here is that we want to do what we say we're going to do, or proactively communicate otherwise, and that's kind of a mantra that I've used to execute. So nobody's perfect. You're not going to meet every deadline, but if the person that you're handing the project to or that's counting on you to finish it, if you can set the internal expectation that I'm either going to deliver, try and make as many of my goals smart, specific, measurable, obtainable, realizable, and time bounded as I can. And then that time bounded is really the key. And that's one of the things I love about our profession is that a lot of our work is time bounded, but there is a lot of work that isn't time bounded. So I try to take the things that aren't time bounded and make them time bounded to set expectations, whether it's internally or externally, and then really hold myself accountable to that. And one of my sayings is that, if I give 5-star internal client service, the external client service will receive 5-star service as a result.
Hmm.
So I think when you're thinking about a team, if we take care of everybody in the team, the result of the team's actions will be great service to our external clients. And that kind of marries, in the 80s, 90s, we were a society that was focused on the customer, customers first, customers always right. Today, we're a little bit more of a society that's always focused on the employee. Take care of your employees. Don't burn out your employees. We don't have enough of them. And I really see every organization as a three-legged stool between the shareholders, the employees, and the clients. And if I'm a woodworker and I'm building a three-legged stool, I want every one of those legs of the stools to be the same density, the same length, the same width. Every measurement to have the perfect stool. Every measurement of those stool legs is exactly the same. And so I don't see them as one is more important than the other. I see them as codependent. And when you realize that they're codependent, it becomes a stronger stool. And so one of the things that we do that's really unique at our firm is we call it and one. And I hope our whole industry adopts and one. I will tell you a lot of our industry doesn't. And because it drives down realization, and we're scared about driving down realization. So what we call and one is we might have interns to first, second year, 3-year people, but every time somebody is in a meeting with a client, we want somebody else there that's benefiting from that meeting internally. What we have found is what that does is it gets the young professional engaged in the professional purpose that this type of industry can provide when you're connected to the people you serve. And so we and one. Now we ask the newer employee or the less experienced employee to bill their time, so our utilization stays industry standard, but we write it off. But what that does is it builds leverage. And leverage allows that employee to have a more purposeful career instead of being stuck in the back room until they have figured out everything technical and talk to a client. They actually, and while they're learning the technical side of our business, they also learning the relationship side of our business simultaneously. And I think our business or our industry has a little bit approached it like we have to teach all the technical stuff and then we'll teach the relationship stuff. And at our firm, we've really focused on teaching the relationship skills simultaneously with the technical skills. Now, does that mean we have to have more labor to produce the same thing? It absolutely does. But it's an investment, it's not an expense. And when you start seeing it as an investment, and it's an investment in growing your business and leverage, and if you read I read all of the industry surveys, and all of the industry surveys would rank realization and utilization typically outside of the top 5 of the KPIs that most closely correlate to net income per partner. And most of the indices or the KPIs that correlate between net income per partner and the KPI themselves are actually leverage statistics. There's some version of leverage. Revenue per partner, number of employees per partner, average bill rate per partner. These are all leverage indicated statistics. And so at our firm, one of the things we've done is we've revolutionized how we track leverage so that we don't track leverage by the head count or by the revenue dollar. We actually track revenue as a ratio of the hour that the partner puts on the book to the dollars that book produces. And we've started graphing this, and we graph it. Quite frankly, we find it's more beneficial to graph that more than the statistics we care less about. So if we're looking at utilization every day, we should be looking at leverage every day. If we're looking at utilization every month, we should be looking at leverage every month. But the point is kind of this 80-20 management is you have to spend your time on the statistics that matter the most. And again, there isn't a survey out there that would say leverage is less important than realization and utilization. So one of my big things is I want the industry to start thinking about leverage. And historically, we've only talked about leverage as it relates to human capital. So number of employees per partner type thing. We actually see leverage multidimensional. So human capital is the easy one. We all understand that. But we actually have moved it into a discussion about brand capital and how to leverage your brand capital. And CPA firms and accounting firms have benefited for so long from a high value of brand capital. What we haven't figured out is how to multiply it or leverage it. We just leverage it for more accounting work. And of course, the problem with building your business model like that is when you get into a labor constricted environment, you could have really high brand capital, but if you don't have high human capital, you can't produce the sales. And you're always stuck to, in order to give my employees more pay, I have to raise my prices because you're only solely focused on human capital leverage. So we need to get the industry focused on human capital leverage, more than realization and utilization, brand capital leverage, IT leverage, technology leverage, and that means something for every firm. For one firm, it might be how they're going to bring in AI. For our firm, we are intently focused on automating the administrative process of a CPA firm. And I could talk a little bit more about that, but we've basically developed a practice ERP software that sits on the Oracle NetSuite platform. And what I talk about is there's a big difference between an ERP platform and a software. We've all bought software where the software comes out of the box. Today it comes as a download. We download it or it comes as a login. And we leverage that software to whatever features are in the software. But the software isn't really modifiable unless we put a suggestion in the suggestion box of the software developer and they decide to pick it up and do it. With a platform, the platform is completely flexible. And so we have a group called CPA 360 that is working on suggestions to the platform that then we submit to the developers. And because it's a platform, if a firm wants to, they can go do a one-off and just make a modification just for them, for that firm, an individual modification, different than a software. So you could have, I could have a different version of the platform than, say, Roger's firm. That's very unique, because usually it just comes out of the box. And because we're thinking like that, where it's dynamic and it's multidimensional, how the software develops or how the platform develops for one firm might be different than how it develops for another firm.
Tim, I'm going to jump in here. You've covered quite a bit of information for my listeners. There's a few things that I want to backtrack on, and then I still want to get to your comments on those two other things that I mentioned. The first thing I want to point out is, for my listeners, can you just explain what ERP stands for?
Oh, Enterprise Resource Planning.
And regarding a platform, I'm presuming that you're referring to basically an open source platform.
Yeah, we're using NetSuite for our ERP system that we built. So many of us, how I would describe it is, many of us have manufacturing clients, or we know manufacturers, and manufacturers typically have one software that runs the company from head to toe. So what we have in our ERP system is we have all the logistics, all the due date tracking, all the timekeeping, all the financial statements, all the CRM, all the time and billing. It's all wrapped into one system. And so we're tracking leads, and then we're, everything that happens administratively in our firm is in the ERP system. And if we don't like the default in the ERP system, then we create an API, and an API is a computer link between two softwares. So today we're working on APIs between our computer messaging system. We use Cisco WebEx. So pick an environment where I get a phone call from a client, and when I'm done with that phone call, my ERP system suggests a timesheet because it knew the client that called me, it knew the duration, it knew the highest probability of the work code that I was putting in, or the active project. And so it would try to pre-populate a timesheet for me. And now all I would need to do is accept, edit, or delete the timesheet. And it's the same thing. We already have it built in today, where when you move a project from one status to the other status, you start the project, you go do your work, and then you move the project. The system basically, in an automated fashion, suggests the timesheet. So you don't spend any time. Imagine a world where we could spend less time keeping time. And what would that do for the culture of our industry? And I get the proponents. I'm a huge proponent of flat fee billing, if a firm can build around that. But I am also a proponent of understanding the cost to provide the product. So I like an environment where we have flat fee billing, but we also have record keeping to determine if we've appropriately priced the flat fee product.
Yep.
So it's that mirror that I see, and I see the way to do that is to automate the timekeeping and automate really every process.
So just to be clear, are you internally doing the timekeeping just to confirm your flat rate billing, or are you actually using the hourly billing to do the transactions with your customers?
Both, depending on the relationship we've negotiated with the client.
Okay. Well, let me jump in here as time is quickly passing. I want to jump into a few things. One, you brought up KPIs. I really appreciated that. The comments that you had regarding how important those are and the ratios of various elements, hugely important. I could spend a whole afternoon, talking to you about those various ratios. You actually were kind enough to share a few of those that matter most in your firm, the correlations between managing partner to the staff on hand and so forth. I'm just curious, of those, is there a particular one that you pay attention to?
It's every version of leverage that I can think of. So it's, as you mentioned, staff to managing partner, or staff to equity partner, staff to profit partner, partner to manager, manager to staff, admin to staff.
And what are some of the standards or ratios that you're looking at with those? What are the ideals?
Yeah, so for me, we track dollars billed per hour per partner hour billed.
And is there a standard that you're looking at?
Our firm will range any place from $800 an hour all the way up to $6,000 an hour.
But what is the number you like to see? What's the standard that says things are going good? If you're above X, we're doing all right.
I like to see 3,500 to 4,000 an hour. I think that's easily obtainable. And of course, there's two ways you can do it, right? One, you can grow your business and not bill more hours. That would achieve a higher leverage number.
Mm-hmm.
And the other way you can do it is spend less time on your book, hire staff and train staff to spend more time and produce more work, and then you spend more time on your business. But for me, it's less about like where I want the number to be and more about the journey that I personally need to go on as a partner or an owner. And as I put myself on this journey, I need to just continuously get better at this statistic. So if I know the statistic, like even our partner that's at $800 or $900 an hour, extremely talented and valuable partner. And I don't see that partner as less performing than the partner who does $5,000 per hour or $6,000 per hour. I want that partner to be focused on here's where I am today, and now I'm going to make it incrementally better. And I want them to see making leverage incrementally better as more important than making realization or utilization incrementally better, or total charge or margin. I want to see. I equate it to a golf game, Roger. You and I are going golfing, and you're a par golfer, and I'm 28 over par. I'm not going to get to your level. But if I can get to, because I'm golfing with you and I'm watching how you golf and I'm watching how you approach it and your backswing and all these ways that you approach the game, if I can get to a 20, I'm a more valuable player. And now if the four of us make up the foursome of the team, now because I'm a better player because I watched you and understood my game in comparison to your game, now the four of us will be a better team.
Yep. One of the things that I appreciate you bringing up here is the importance of watching these various numbers. The KPIs, they're very useful. And I'm of the opinion that if you have a standard that you at least establish as the business model, this is where we need to be performing. This is what we can't go below or above. Then all of a sudden what we're doing is we're watching to see what current or actual numbers are in comparison to that standard. But to your point, it's basically a history as well. How are we improving? How are we doing better? Is this year better than last? And so there are a number of metrics that I look at on a monthly basis, a number that I see on a weekly basis, and there are those that I look at on a daily basis. And they're all integral to running the business. And when it comes down to the end of the year, I am looking at things like EBITDA and so forth. I want to know what these real numbers are, so that I'm familiar with how the company is evolving and changing. Now, with time fleeting as much as it has, I do want to tap into two more questions real quickly, and I'm going to give you a time allotment. I'm going to say, give me basically a 1 or 2 minute answer to each. Okay. The first is I know you've grown your business tremendously up to now, the 300 individuals that you've mentioned. There's a staffing shortage out there. There's a concern about finding quality people, struggling to find the staff that individuals are needing to grow their business. What are you doing to address that need?
So there's three things that I can think of. One, we have to get better at tracking, grading, and understanding when a remote employee needs training or needs management. Managing the remote employee is much different than managing the on-site employee. That I think is done through automation of processes. Number two, we have to embrace offshoring. Our firm we have boots on the ground in 4 different countries, and we can easily help other firms offshore. We have the ability to place full-time employees with any firm at very low costs with 4-year accounting degrees or 5-year accounting degrees. We've also worked with some firms to import accountants from other countries into the U.S. And then finally, just really focus on recruiting. Probably 10 years ago, I took our advertising budget and cut it in half, and decided to spend half of it on recruiting. And how you spend the money on recruiting will be different for every firm. We help firms with recruiting, smaller firms that don't have a recruiting department. But you need to have a strategy for recruiting.
Very good. I love that. The next question that I had is regarding your growth. Obviously, we spoke at the very beginning of you needing to change your role every 3 to 6 months is what you had said. I'm just curious, what do you see your role as today?
Yeah. So I'm fortunate that I've got a lot of good young partners in our firm, and they're pushing me to be a CEO of a larger company. And I'll be honest, I'm one of these people that enjoys the work of our profession. So it's been a real challenge for me, but I'm moving more towards what I would call a MBE ambassador or a brand ambassador, somebody working in M&A, somebody working on strategy. Uh, Probably as little as a year ago, I would have said, no, I'm just somebody who, takes care of X millions of dollars of clients, and I just, oh, by the way, on the side, I run a CPA firm. I'm really trying to transform myself into, no, I run the CPA firm, and then I get to work with a few small select clients.
There you go. Very good. Well, Tim, this has been an amazing conversation. I've really enjoyed the conversation simply because of the insights that you bring to the profession. I love what you've done with your organization. So here's what I'm going to do. I'm going to kind of summarize a few things and then come back to you for a closing thought. In summary, I want to start, however, with an offer. Tim has been very, very kind to be able to say that if you'd like to learn more about what he's doing as it relates to growing his business, he happens to have an organization that he's mentioned, CPA 360, where he works with a number of owners of accounting firms and helps them basically address the problems that we're each facing today. And so if you'd like to know more of what the group CPA 360 consists of and whether or not you'd be a good fit to participate with that group in solving the firm problems and unlocking your opportunities, Tim's offering for you to go to the episode description and get there his email address where you can reach out to him and one-on-one find out more about what it is he's doing in his organization and with this CPA 360 group to actually address our issues today as accounting, bookkeeping, and tax businesses. And in doing so, I would encourage you as a listener to take advantage of this simply because of the fact that I think we can all, like Tim had mentioned earlier, help one another as a community address the various challenges that we're each facing. So definitely encourage you as a listener to go to the episode description for that information, his email, and reach out to Tim. Now, the other thing I'd like to mention as a summary of today's call, I love the fact that as early as he mentioned, young and basically, I think he was 9 years old or ninth grade. I can't remember which, but the point was is he was interested in becoming a CPA at that young age. That's phenomenal. I think that's something that I rarely run into as somebody who is that clear in their mind so early on as to what it is that they'd like to do. I know that there are people out there that have that drive. Maybe they have family members or friends that they're raised and influenced by at an early age to see the value of this profession, and they go headlong into it. And Tim just basically did that. He went into it. And I really enjoyed the conversation where it started with his challenges, the struggles that he faced starting his business. So many of us have different things that we're facing as we're starting our businesses. And he was able to say that he was able to lean on his family, his parents, for support. And I do believe that we all need to have those key individuals in our lives that we can lean on so that as we're growing our businesses, we're not doing it alone. The other thing that I also appreciated was the fact that he's been able to grow his business as much as he has. And he brought up the idea of offshoring. Offshoring tends to come up quite a bit right now in the conversations I'm having. So I'm glad that he brought that up as an option that we can each use as we're looking to find quality staff and grow our firms to offer quality services. But the thing that I valued most was our conversation about the KPIs. I think all too often we bring these things up with our clients. We start pointing out ratios and things that they need to be watching as they're running their companies, and we failed to do the same with our own businesses. And so I really appreciated the fact that we were able to spend a little bit of time talking about the KPIs that we each can be using as we're running our business, finding out those correlations, those ratios that we need to watch that matter to us in our firms. And as we pay attention to those, it's not that there's a right or a wrong, as Tim was mentioning. It's just to see that they're improving. I like the idea of at least knowing the standard. What does it have to be for the business model to work? And are we performing better than that standard? But it is true. We want to see that these are improving and evolving over time. So great little segments there within the conversation. Great summary. So Tim, what's your final thought for today?
Just thanks so much. And, again, just trying to, I call it Kaizen, just kind of keep getting better every day and, enjoy the journey, because don't see any of these things as you're working on your firm as a project, see them as a journey. Uh, and if you see it as a journey, you won't get frustrated that it's not built and done tomorrow. It's a lifelong journey. And if I can help, just reach out to me.
I love it. I love it. Yeah, let's enjoy the journey because it is a great experience. Life has a lot to offer, and I enjoy the profession that I'm involved in as well. Great people to interact with. All right. Well, everyone listening, here's what I'd like to do. Real quick. First of all, I want to invite you, if you haven't already, to register for GrowCon. GrowCon is an annual event for accounting professionals. You can join us each and every year at the conference to hear from the experts off of the stage, and at the same time, meet your peers. Find those individuals with whom you can interact because they're doing exactly like you are, starting, building, and operating successful accounting, bookkeeping, and tax businesses. So I invite you to join and attend GrowCon. In doing so, you'll also meet the staff here at Universal Accounting Center, those individuals that are committed to helping you be in business for yourself, but not by yourself with Universal Accounting. So come join us for GrowCon. It's definitely an event you do not want to miss. You can go to universalaccounting.com and in the navigation find the information regarding GrowCon as to where, when, and so forth. But I look forward to seeing you there. Also, if you haven't already subscribed to the podcast, definitely do so now. You want to subscribe, set your reminders so that you can get the notifications regarding the weekly releases of new episodes that we have, where we bring on the experts, various individuals that have been successful. They have things to offer us as an accounting community to help us run successful businesses. And then lastly, I'd invite you to go to universalaccounting.com and there find the free resources. It's in the navigation, free resources. There you're going to find a number of free tools, resources, things that you can actually use to benefit your organization as you're working on your business. You'll find ebooks, you'll find courses, you'll find various white papers that are to your benefit. So definitely go to the free resource section at universalaccounting.com and take advantage of those there. Lastly, with regards to today, if you'd like to learn these principles or apply them in your business, feel free to also reach out to Universal Accounting. You can go to universalaccountingschool.com or give us a phone call at 801-265-3777. And always remember this, if it's about accounting, it is universal. Take care and have a great day.